Friends, in this video for iThought Advisor, I am going to talk on the topic, when markets correct, what should we do? Most of us have been traveling into this correction with very strong FOMO. As the Nifty kept moving up, forming new highs, most investors were feeling a little bit left out. The thought in the mind was, could I have done a little more? Could I have been a little bit more active when the markets were down? But when the Nifty corrects, what do we do? Several investors invest on their own, but there are more investors who are investing under the guidance of either advisors or MFDs or being with PMS managers. Whatever may be the nature of engagement, when markets fall, there are very clear, well laid out responsibilities. If you are with somebody and they are supposed to tell you what to do, and that's the nature of the relationship, then they must ensure that you participate when there is a correction. They must lay out how much you need to participate in the correction. For that, you need to consider what is the kind of investment need you have, how you have invested in the months leading to the correction, cumulatively how much money you have invested in that year, whether you have achieved your investment goal and invested adequately for that financial year, how much more investing you need to do to achieve that goal, and only then you decide how to pace your investment into the market. Clearly, somebody doing it on his own would need to do a lot of preparation to come to this point. I assume they know what they are doing. But somebody who is taking the help of another person in whatever capacity has to be ready to do whatever it takes. My observation has been that people who have high FOMO when the markets are going up become very, very inactive when the markets are going down. This is strange. Till a week ago, they were feeling bad that they didn't buy enough. And when the markets fall, they think that they will be cleverer than the market. Now look at the evidence. In a rising market, if you have FOMO, it means that you didn't read the trend right and were caught on the wrong foot. In a falling market, how do you think that you are going to be cleverer than what you were in a rising market? Odds are you would be just as clever. So you need to accept that in every situation you could be wrong. When you accept that you could be wrong in every situation, then you try to get it right by making smaller incremental disciplined steps. So you avoid the mistakes of inaction. You avoid the loss of opportunity which comes because you become very inactive. You stay active, you decide how much you want to be active, you raise your activity as you go along and investments become more and more favorable. Clearly, this pattern has to play out at least now, and if you are one of those who felt you missed out when the Nifty hit a new high, now you have the opportunity to make amends. The next question is, where do you put the money? I don't think there is a generic solution to that. But don't chase investments which are already at a high valuation. Ensure that the money you put in this market is only in places where the valuation is still moderate. If the valuation becomes even more attractive, from moderate to attractive, then you can continue investing into that investment. You will have the confidence to invest. So choose the right space. Don't buy dips blindly based on how much an investment has fallen from its highs. that has no relevance, especially when you put 1 year behind and start another year. The trends can become very, very divergent. Stocks which were favored in 1 year can completely go out of favor in the next year, and stocks which are completely out of favor in 1 year can come into favor in the next. We are heading into such a phase, and I want you to remember this aspect when you choose where you want to invest. I would generally tilt towards sectors which are still out of favor and which could potentially come into favor in the coming years. I will also tilt towards sectors where the valuations are moderate, and I will build my investments steadily. I will not waste any correction, and I will participate in every correction. It doesn't matter what hat I am wearing when I am doing these things, whether I am an investor, whether I am an MFD, whether I am an advisor or a fund manager. Behaviorally, you have to do the same thing. So, whichever side of the divide you are on, understand this. There is no conflict. There is no divergence needed. We should all be on the same page and do whatever it takes to participate in every correction. Are you expecting a bigger correction? Then be ready to invest at the same pace or a slightly higher pace in the bigger correction. Essentially, all this boils down to mental preparation, disciplined investing, and an acceptance that you could be wrong on the timing. But the outcome eventually would be that even if you get it wrong a few times, continuous disciplined investing will lead you to the right place, and your final outcome will be right. You will get it right finally. On that note, I encourage you to participate, to understand what you need to do and not miss out on every correction. Thank you for watching this video.